Welcome to the next lecture, that is the most important lecture in this course. The students are regularly asking me to tell them the best set of indicators and their settings that can be applied on different time frame. But the most important part of technical analysis is to analyze a chart. Application of indicators is the secondary thing in technical analysis. Indicators only tell us the signals, that is the buy signal and the sell signal, to remain in a move or stay away the trade in specific interval of time. They only tell about the current direction of prices, but they don't tell us what should be our direction of trade. And that is the most important thing that we must know before making any position in the stock market. So in this lecture, we will learn a step-by-step approach to analyze a chart and the application of different indicators on different time frames. First of all, you should always know your trading perspective. You can be a long-term investor, you can be a positional trader, you can be a day trader, or you can be a scalper. Then choose the set of 3D charts that relates to your perspective. For example, if you are a long-term investor, your chart should be daily, weekly, and monthly. And if you are a positional trader, your chart should be hourly chart, daily chart, and weekly chart. And if your trading perspective is day trading, then your charts will be 5-minute chart, 15-minute chart, and 60 minutes chart. After choosing your 3D charting, open the higher time frame chart and draw all the support and resistance lines, and also apply Fibonacci to the last swing. In an uptrend, if you are below the peak of the last swing, apply Fibonacci from bottom to top of the last swing to know the retracement levels. And if you are above the peak of the last swing, apply Fibonacci from top to bottom of the last swing to know Fibonacci extension. And in a downtrend, if you are above the bottom of the last swing, apply Fibonacci from top to bottom of the last swing to know the Fibonacci retracements. And if you are below the bottom of the last swing, apply Fibonacci from bottom to top to know Fibonacci extensions. Then shift to middle time frame and analyze the chart thoroughly. Find out the current trend, find out your current position, whether you are in trending phase or retracement phase. Find out if any chart pattern is forming. Draw the trend line. If you are not able to draw a trend line, then draw only internal trend lines. Always use log scale settings to draw the trend lines. Find out if there is any divergence on the chart. The next step is apply different indicators on middle time frame chart and find out your entry point. Also mark levels of Fibonacci applied to the current swing. You can choose one indicator from each category, but I prefer traditional indicators for long-term perspective. If you are a long-term investor, then use RSI, ADX, Chaikin's oscillator and Fibonacci to the middle time frame, and if you are a short-term trader, then use RSI, Chaikin's oscillator, MACD and Fibonacci to the middle time frame chart, and if you are a day trader, then use RSI, MACD and Chaikin's oscillator to this chart. Last but the most important step is shift to lower time frame chart and find your various entry and exit positions that you can make in between the current trend based on moving average crossovers and other indicators. If you are a long-term investor, then on lower time frame chart, that is the daily chart in this case, your set of moving average combination will be 200, 100 and 50 EMA. Do not use any other indicator on this chart because your perspective is long-term investment. As long as 50 EMA is above the 100 EMA, you can hold your trade and exit the trade when 50 EMA crosses down the 100 EMA. If you are a short-term trader, you can use RSI and stochastic RSI. If prices are moving in a trend, then use RSI, and if prices are moving in a range, then use stochastic RSI. If you are an intraday trader, your moving average set will be 14, 7 and 3 period. But if the market is volatile and you want smooth signals, you can change your set to 20, 10 and 5 period EMA. Also use RSI and Bollinger Band to this chart to get confirmed entry points. So this was the whole process of analyzing a chart with respect to your trading perspective. I'm sure if you will follow all the steps with discipline and practice them on past data, you will never lose money in stock market and make good profits. Thanks for watching the lecture.